Hey everyone, welcome to your first official tutorial that'll walk you through some accounting concepts. So for this tutorial, I'm going to walk you through and I'm going to review three of the financial statements that are overviewed in your first note. We're going to start here with something called a trial balance. If you recall from your grade 11 course, the trial balance shows all of our accounts and they're listed with the balance sheet accounts listed first, followed by our income statement accounts. And our balance sheet accounts are obviously assets, liabilities, and owner's equity. Revenues and expenses go on the income statement. So uh, I'm not going to do the technical kind of how to make a spreadsheet thing that's available in your tutorial and a lot of the functions that we do in this exercise or this example follow a lot of the things you would have seen in that first tutorial. So please go back to that first tutorial if you want to know how to double underline and do dollar signs and things like that. That's not the purpose of this tutorial. So I'm starting with a trial balance. I see that this company, Benny's Auto Detailing, we'll get into debits and credits and review those in a few days, but our accounts on the left-hand side of this trial balance, which is the debit side, add up to $1 million, and we also see that we add up to $1 million on the right-hand side as well. It's really important that we differentiate between the balance sheet and income statement accounts. What I often tell my students to do if they don't remember or they need a quick refresher, when I'm in class, I actually get them to take their pencil and do a big line below the drawings or above the sales to indicate that we have different financial statements. So I'm just going to color block them here just so we see them for the purpose of this example. So from sales down to supplies expense. We'll do these in an orange. These are income statement accounts, and then the accounts above belong on the balance sheet. And actually, in a little bit, I'm going to show you that it actually isn't totally that way. But so I'm going to start with my income statement. I do my income statement first in order of my financial statements for a very specific reason. And that is because in order for me to update my equity in the company as an owner, I need to know if I made or lost any money. So first step in this is I'm going to take these accounts, so from sales, fees earned, and my various expenses, and I'm going to copy them over to an income statement. On the income statement, you'll notice we've got the company name, Benny's Auto Detailing. I'm identifying that it's an income statement. And then the date is a little bit different. So an income statement is for a period of time. If you look at our trial balance is on a specific date. So in this case, May the 31st, 20 whatever, so 20 dash dash. Our income statement is for the month ended May 31st, 20 dash dash. Make sure you pay attention to that as you're doing your own financial statements. Sometimes the date differs between the financial statements that we are doing. So what I've done here is I've got two major titles. I've got my revenues and I've got my expenses. Revenues are the monies that a company earns in the course of their business. So in this case, the company had two types of revenues. They had sales and they had fees earned. So Benny's Auto Detailing for the month made $100,000 in sales, $45,000 in fees earned. We add those together in this column here, and we have $145,000 in revenue. We then have the title for expenses, identify our expenses. These were all taken from the trial balance. So these are all the orange items that we took. So they added up to $118,000. So our net income for the month is $27,000. This is a really important number for us. So that is going to be carried forward soon. So I'm just going to color block that one again so that we can look at it. In terms of formatting, this is how I like to see my income statements formatted. Your teacher last year may have done something a little bit different, so please pay attention to the examples that I've given because there is a format that I like to follow. There is one thing that you can do if this helps you with your kind of organization. I know that some students, this should not be there. This should actually not be there. I think I was doing an example with my in-person class and that was there. So you will put your totals over this way. And as this is the first tutorial too, as an aside, I will make mistakes. You will make mistakes. If you're ever doing a recording for me, don't stop the recording because you made a mistake. Just correct your mistake on the recording. We're human. We're allowed to do that. So some some of you may prefer to do this. You may prefer to have a item that says total revenue, and then you can add your revenue together, and you find that in terms of for your understanding or organization, you prefer to do that, and then down here you would do total expenses and do the same. Either or is fine with me, so I will just leave mine as is, and I'm just going to get rid of this. But as you're organizing, do whatever floats your boat. I'm good with it. Okay, so back to our learning. So we have a net income of $27,000. The owner gets that money. That's why we run a business, is to earn revenue. And in this case, Benny's Auto Detailing made $27,000. Now, when we go back to the trial balance, somehow I got rid of these colors, doesn't matter. Now it's yellow, I don't remember what it was before. We will notice that there are a couple of accounts that go on the balance sheet, but actually we can rip those out and put them on their own statement called the Statement of Owner's Equity. So we're going to color block these guys in blue. And these are going to go on our next one. So we do our income statement and we get our net income. Now we go to our Statement of Owner's Equity, and you will see that my original capital on May the 1st was $324,000. I got that from my trial balance. I am then going to add my net income. Where did I get my net income from? You got it. From your income statement. Very good. So if I go back to my income statement, I see that that $27,000 was earned for the month. That belongs to the owner. This one we got from the trial balance. And then this one here, you'll notice we get from the trial balance as well. All right, so the owner took out $8,000. That's going to bring down their equity for the month. So when we get to the Statement of Owner's Equity, we take our original equity. We are going to add the net income from our income statement, take away any money that the owner took out. That's in an account called drawings. We're going to subtract the drawings from the net income, and it shows that our equity has increased by $19,000. Add that to what we had at the start of the month, and that is our new equity. So this is a super important number. So we're going to do that one in red now. So we have to do the income statement in order for us to get the net income or net loss for the month. We then update our Statement of Owner's Equity and update our capital in the business. And what we finally do is we do our balance sheet. So that 343 is going to be super important, and I'm going to identify that right off the bat. So when I go to the bottom of my balance sheet, you will notice that that 343 has shown up. So let's walk you through the balance sheet. Unlike the Statement of Owner's Equity and the income statement, the date is a very specific date on the balance sheet. So this is what we own, what we owe, and our stakes in the assets in the business. That's the purpose of the balance sheet, is to show the items that we own as a business and how we pay for them. The income statement shows our operations in the business and how it's done in terms of profitability. So all of these numbers here have been taken from the yellow part of the balance sheet. So cash, receivable, supplies, land, and so on through to mortgage payable. We will be splitting those up into categories. So our assets, we have current assets from last year. A reminder that those are assets that we are going to use within a year. Cash is where we have all of our bank accounts and stuff. So in your class in person, maybe it was identified as bank. I call it cash. Accounts receivable are those are bills that our customer owe us. So they bought something on credit and they're going to come in and pay for us. And then our supplies are our staplers and pencils and pens and all that stuff. So we are going to subtotal our total current assets. In this case, it was 97. Our fixed assets are assets we're going to have in the long term. We're going to list those in order of their lifespan. So land will be listed first, followed by building and equipment. We subtotal that. So this company had 777 in fixed assets. Their total assets were $874,000. If we did this right, our liabilities, which are debts to the business, along with our own investment into our assets, have to equal $874,000. Hence the word balance sheet. There's no way around it. If you go to Yahoo Finance right now and look up your favorite corporation or a corporation you can think of, most people will think of Apple off the bat. And you go to the financials tab and then click on balance sheet, you will see that Apple's total assets are equal to their liabilities, and in their case, shareholders' equity, not owners' equity, and it has to add up. There's no other way. The assets must equal liabilities plus owners' equity, as you saw in the very first note in this course. Okay, so those are our assets, liabilities, and owners' equity. We have current liabilities. Those are ones that we have to pay within a year. In this case, we had a couple of payables, and then we put the total on the right-hand side. In terms of long-term liabilities, those are ones that are going to take longer than a year to pay off. So we have a long-term bank loan along with a mortgage on our land and building that are valued at just over $500,000. Our total liabilities, we put the total of that there, $531,000. We then have a title called owner's equity because that's that section. And then we know that Mr. Ferrari has $343,000 in updated capital. We had to update that in order to show our business operations, and you will notice that we did it right, or we think we did it right. Most likely we did it right because we have our assets equaling our liabilities plus our owner's equity. So those are, that's a quick review of your financial statements. Again, you should have done this in grade 11, so this is more of a refresher for you. I'll post an exercise and a discussion item so that I can see where you're at in terms of your learning. The next step after this is we're going to do some journals and ledgers, and then you're going to get a summative task that kind of wraps up the first part of the accounting cycle that you would have taken in your grade 11 course. Okay, so reach out with any questions, but there you go. That's an example of financial statements for you.